Palantir knocked earnings out of the park. Growth seems to have returned to the company, and the market recognized this by flying up almost 18% at one point in after hours. Well, right now they have settled back down, up only around 11-12%. But regardless, the market likes the numbers so far from what we've seen in the after hours. And we've got big multi-million dollar deals, some surprising buybacks, and many more positive metrics showing the company's growing. So, looking at the headlines first, Palantir reported 27% year over year revenue growth and raised their full year revenue guidance while still being profitable on a GAAP basis. So, they got to start out with the anecdotal evidence first, and we'll see a cool slide later on those deal wins, but they've now completed boot camps with more than 1,025 organizations in the United States and around the world. And they showcase a couple customers on here from their latest AIP Con, and they got to put up the eye-catching quotes where AARP got their first prototype launch within 45 days, and Fujitsu finding an impressive annual cost reduction of $9 million within just 3 months. So if that doesn't scream value to you, then I don't know. But then hitting home on this, we get a cool slide with the anecdotal evidence on boot camps working. They got a 7-figure 2-year deal, meaning it's at least $1 million, signed within only 16 days later after a boot camp. Now, if that's a fresh new customer or existing one who's expanding, I don't know, but it still shows some level of correlation with clients getting their hands on the product. Then they got a 7-figure contract value deal in under 6 weeks as well, signed, so it's still a pretty fast turnaround there. And then they also showed how they got their foot into the door with 25 days later, getting a conversion on their paid pilot program, all starting from a boot camp. So yes, we don't get huge metrics, and maybe it's not practical to provide that on boot camps yet, where it varies between them. That's just my assumption. So it's nice to attribute some wins to the experience of the customers getting into the door. Then we get several slides on the recent deals too from their huge customer base, showing continued expansion from these existing customers, but check those out in detail when you have a chance, since those have already been covered right when they came out during the quarter. Now, the juicy numbers. Palantir likes to tout their current bread and butter, US commercial, and they've got all the growth rates to boot, like 55% year-over-year growth in revenue or 83% year-over-year growth in customer count, but also the remaining deal value remaining in their backlog up 103%, as well as the sheer number of US commercial deals at 123. And they also got to put that 9xing their customer count since the last 3 years. Granted, though, it's a small baseline when they started, but still, to stand up a new line of business so quickly speaks volumes at Palantir's execution, and 9xing that is huge. So quick on the GAAP net income first. They continue to expand this, surpassing $130 million in a single quarter of GAAP net income. Palantir continues to expand this metric, showing there's no danger of losing S&P eligibility when it gets to that point, of course, as well as the sustainability of their business to survive and financial prudence of management keeping costs under control, while still driving that growth to their business at the top and bottom line. Then we've got GAAP operational income, which is the same trend, but it's the first quarter of over $100 million in GAAP operating income, showing even without the interest income, Palantir will hit this metric and grow it. We don't need to sit on the cash there, but it's still their cushion for GAAP net income. But like I mentioned with expenses, they're not trying to just throw money at problems, but rather be intentional about where and how they spend the cash they have for the best return. Now, with the new metric from last quarter, Rule of 40, which is a combination of their revenue growth and adjusted operating margins, this is expanding even faster, showing Palantir is well above the industry standard, at least for this performance metric. Now, in part, though, this is hugely driven by the 27% revenue growth we'll see, so I'm not sure where we go from here, but the higher the better, right? Now, onto the juicy stuff, commercial revenue growth, specifically US commercial revenue growth. This has expanded now 55% year over year. And obviously for commercial, even if only 33% overall, it's mainly being driven by US commercial. So even if international commercial revenue is not growing as fast, they're at least keeping up to have the overall metric at 33%. And I continue to expect Palantir to keep doubling down on US commercial to just exponentially outperform international over time. But it's nice to at least have that extra money come from there when it flows in. And who knows, they may see their US counterparts and competitors doing this and wanting a piece of the pie using Palantir as well because it actually works. Now, this came out of nowhere too. Government revenue growing at 23% overall, specifically US government expanding at 24%. Now, as their mature and lumpy business, I was not personally expecting this at all. Although management still puts the caveat that with good timing on the payments and deal signings, this worked out in Palantir's favor this quarter, so maybe take it with a grain of salt. So I don't know if that means we'll see this drop back down for Q3, but for the moment, it's great to enjoy the short-term win for this mature business. And then you also can't forget total revenue growth since we've covered both of the segments. The 27% growth smashed the high end of their guidance last quarter, aiming for around 22.5%. At 27%, as we saw with the previous slides, US commercial and the amazing deal timing for US government were huge drivers of this. And you'll see some of that cooling down though when we get to guidance, although I'm still optimistic on their performance for a couple reasons. Now, another kind of cool but not actual 30% growth rate for revenue is when they have the strategic commercial contracts taken out. They actually hit that 30% there. And I know symbolically and qualitatively and quantitatively, this is a major milestone that lots of early investors were told about. And the narrative over the years has changed basically to not talking about this, but maybe this is their way of hinting back to that narrative if things go well. Once full revenue growth is officially above 30%, this may be the case and they want to tout at this, but still, it's a nice tidbit that they can actually hit that percentage growth given a few qualifiers. And then the second part of the Rule of 40s equation is the adjusted operations income margin, and that's still healthy at 37% and expanding. This expansion continues to show that while they are investing in themselves and growing, and that growth is coming, they're still doing this responsibly, like I mentioned with their GAAP operational income. Palantir, well-deservedly, should tout this aspect of their business, where they're coming back to top-line growth and still maintaining the money flowing down to the bottom line, which is really the end goal of mature businesses anyways in the long future. Once your market is captured, how much money can you keep? Now, onto the juiciest, customer counts. Now, with the 83% year over year, no doubt that grabbed a lot of attention there, and Karp touted this too in his earnings CEO letter, basically noting how they started from no customers only a few years ago in the teens, but today they continue to expand. Now, note the consecutive quarter growth of 33 customers is actually less than the 41 gained last quarter. So I want to point that out that not everything is a perfect rosy story right now, but they're still growing their customer count, which matters. Now, percentages may get more difficult down the line if this is the same narrative, but management still seems confident in their US commercial business and will hopefully see a re-expansion of this specific metric on a consecutive quarter basis. And this can be seen on the total customer count too and the total commercial count. They fell short of 600 total customers, but it's not the end of the world. Their overall customer count landed at 467, so as the consecutive quarters roll on, it's only 9% versus the last two 14%. Granted, as I mentioned, the baseline is getting bigger, but ideally this is also going to expand. But with revenue really taking the attention right now, I think we can pass over this at least for now and see this improve later on. And even juicier too, we get the deals closed. 96 of at least $1 million, 33 for $5 million, and 27 for $10 million plus. This is an awesome temperature check on how they are getting deals signed. Obviously, this is a massive amount of high ticket deals and really shows the kind of customers they can get. And no matter, even if some of these are multi-year deals, so it's not all just in 1 year, of course, but this shows down the pipeline of what we can expect for future revenue. And really, this speaks loudly on the value that Palantir brings, where customers are willing to sign these 7 or even 8-figure deals all within a quarter. And that 27 is massive here for the 10 million plus. And you definitely can't forget the money too. They finally hit $4 billion in a cash pile. And actually, if you got to the balance sheet, they plowed more cash into treasuries to get a return. Now, for some, this means they don't know where to invest in their business and get a better return. But where interest rates are now, I'm not mad at this move, considering if they think the rates will go down later on soon in the near future. Essentially, they're just trying to maximize their risk-free rate of return while they can, since their cash is just so big. And this continues to be the theme of financial prudence that I personally commend as an investor. No need to rush and possibly put yourself into a worse position later on while you're ahead. Take your time and put the time and money into the areas that will actually return meaningful returns quantitatively and qualitatively and drive the innovation for the company. And another huge bright spot too, in my opinion, is their guidance. For Q3, they are guiding for $697 million to $701 million in revenue, which on the high end is around a 25-26% growth rate. Now, some will say that's lower than this quarter, so it's bad, but not necessarily considering Palantir's history of outperformance. Of course, it's not a guarantee of anything, and maybe the breathing room will be needed, but as noted, they guided Q2 for 22%, but hit 27%. So really, I'd say it can go anywhere, and even if it hit 25-26 for Q3, it won't be the end of the world and still show they can hit the mid-20s in growth, and the narrative of hitting in the high teens at one point is long gone. And then for the full year of 2024, They increased their guidance, and if you compare that to last quarter at the high end, it's 2% higher. So Palantir's management seems confident enough to raise full year guidance, meaning they see the second half of the year favorably, at least so, from what they're expecting and seeing today. And you have to remember, they technically have 1 month of Q3's information if they watch the business closely enough. And then outside the presentation, I think a lot of investors were pleasantly surprised to see another big symbolic move, at least, from management willing to buy back shares. Now, granted, it's a tiny amount of around $27 million, and we know at these price levels, that's essentially 1 million shares of Palantir, and does not make a big dent really at all for their float. But still, they're willing to purchase shares at this price and show at least for a tiny bit of their cash holdings, they can make some progress. But also note the total SBC levels still outperform and outpace this buyback, but that's the kind of company Palantir is right now in their stage of life, and that shouldn't be a surprise to investors, honestly. Maybe down the line, this will reaccelerate, which is what I'd expect, where I'd have them investing in the actual business and products and marketing and everything to actually bring in revenue. And then later on, they'll worry about buying back shares and making that float. But essentially, if they buy back a lot of shares, they're just saying they don't know what to do with the cash. Now, earnings call wise, we've got management continuing to talk about the themes of growth that were basically covered in the earnings numbers. But those themes still resonate that boot camps are working to them anecdotally, although they don't give any very specific metrics, of course, in terms of conversion. But also, the mission of Palantir is still full steam ahead, where they can support the US government in any way they can, but also throughout the US industrial base, especially with the announcement of their Warp Speed product, which really is targeted at this market. And timing wise, too, I'd say this isn't surprising with their industry AI events and preparations for the outlook of a more disjointed Middle East, which was specifically called out by Karp himself. Now, we did get an interesting question around what Palantir is doing different than the competition, and essentially Sham talks about the prototype to production acceleration that Palantir can provide and do with their products. And really, that's the niche you can say they are in the AI market and filling that right now. How do companies actually operationalize AI and use it in a way that they're confident? Well, they need to figure it out, so Palantir makes it doable for them. They can do this, build out their use cases quickly and iteratively, and then get that to production where they can actually make a huge difference at scale. And then another interesting question was around Foundry and where it still sits today. And yeah, it's not necessarily the poster child anymore like we heard in the past and kind of gets overshadowed by AIP, but it's still a very integral piece to Palantir's value and their whole ecosystem. And we've heard tidbits before that AIP gets people into the doors, but Foundry is really what connects the performance of the business and the data, whereas the AIP layer allows the leveraging of AIs, but you still need to be able to analyze your company. So in the whole Palantir ecosystem, they still know and tout the importance of Foundry, so it's not some retired product banished to the desert. And then also when it came to the analyst questions, Dan Ives, he commended them for their performance, of course, but did want to get that little bit more information about boot camps and working. Now, for me personally, it sounded like they scooted around the question, referring back to those anecdotal deal wins, but I get it. If they don't have the numbers or if it doesn't make sense to calculate in a meaningful way, no point just giving out a number without the nuance, so I get it here. Then they also had Mariana's question on Warp Speed, as well as just the American industrial initiatives from Palantir, and then also being there for primes. Palantir continues to tout their support for doing everything for the industry, especially if it's in support of the West. And really, they expand on Warp Speed, it's more to bring the industrials what they need specifically for their business. And Sean brings up a good point, right? You're not going to build rockets the same way that you build like tennis rackets. Now, not only at a resource level 2 for these customers, but building for that ERP, but even down to the factory level where you can ensure at the floor that things are operating as expected. So we'll probably see more information down the line and demos and videos about Warp Speed. So they covered a decent amount of topics throughout the earnings call, and my thoughts on earnings overall is that this is their best yet. We essentially have a continuation of their growth, and that narrative is returning, that 20% being touted as a high point when us older investors remember seeing 17-18%, which is very disheartening at the time. But also, the 24% from US government really caught me by surprise to help boost revenue, but not only the guidance to continue to go up, and that signals to me that Palantir's management is so confident in their business going forward. So plus, their cash pile continues to grow, so yes, in the treasuries, but I know for a tiny rainy day, they are ready at any moment to strike. Even if they don't, the GAAP net income is going to be happy and cushioned for that maintaining profitability, as well as the S&P eligibility is not at risk at all. So we'll continue to monitor if anything else comes out. But what are your thoughts below on the latest Q2 2024 earnings? Let me know below, and I'll see you in the next video.